generally what technicians do is we'll look at moving averages, right? So the thick dotted one is the 200 period moving average and the gray one is the 50 period moving average. All it's doing is taking the average closing price of the last 200 weeks in the case of this weekly chart, or the last 50 weeks on this weekly chart. So what's the average price? Okay. And you can clearly see the moving averages are moving up, which means the average price of the preceding 200 periods is up. And what we like to do is look at how far or above or below the index, the S&P in this case, gets to compared to the moving average. So this is the percent distance in blue from the 200-week moving average. And I would, on first blush, Kyle, I would say, wow, we're pretty overbought. And I think a lot of people would say that. Just looking at the distance between the dash line and the S&P, say, wow, we're pretty overbought. But if you look over the last, I'm going back to 2010 or so, the periods at which the price of the S&P is stretched compared to the 200 period, the 200-week moving average, is about 33% above back in 2012, 13, 14, 2018. Heading into COVID, look how much higher the S&P was to the 200-week. And then the most extreme was post-COVID up here in 21, where we got 45% above the 200 period moving average. We're only at 21 now. So we're not at 33, we're not 45. So based on that technical measure, you know, market didn't get very extended. I don't know. I'm a technical geek, Kyle. I kind of enjoy that stuff. But
yeah, it makes sense.
I mean, but again, just it's sort of just eyeballing. I'd be like, oh, we're pretty overbought. Look at the distance from the moving average, but we're not even halfway there. So it's not appropriate on the 200 week to say we're overdone. The 50 week, you could see that the gray line. 50 week gets, you know, 12, 13, 14%. I didn't put the figures in there. That one got a little closer to being overbought. It's not quite up to the 21 periods, but yeah, that one's a little bit more overbought. So